Let's get across what we're seeing locally and, well, more broadly as well as things start moving. Peter Maguire joining us from trading.com. Peter, good to catch up with you again. So, look, I mean, risk assets, it's been something to behold, hasn't it, just as far as that momentum is concerned and just where they're going to at the moment. What are you watching? What are your observations about markets?
Well, good morning, Andrew. I mean, when I build on what Marcus said, the movement that you've seen as far as equity markets and certainly the US equity markets over the last month have been breathtaking. Incredible growth, and that obviously is a raging, or much like a raging bull market. Don't forget that you've got GDP for Q2. I think that comes out tomorrow in the States, tipping 3.3% annualized. That will confirm the US expanded at the highest pace since Q4 2023. And that's certainly got to be inhaled. And then the chart there tells a story as far as gold. 50% up in a year. It's a market that if you weren't in it, maybe you've got to, I suppose, look at your strategy a little closer.
Yeah, well, in fact, Marcus was just referring to that. He's got a case of FOMO, but so be it. You can't get across everything, it would seem. Peter, now, so many expectations about those rate cuts in the States. We're hearing that Fed commentary at the moment. Look, a key event later in the week, just in terms of that PCE report, how do you think that's going to move?
Well, that's right. We've all focused on that, Andrew, as far as Friday's release, the PCE, and everyone's got an opinion on it, and I'm not prepared to throw my hat in the ring. I'll just wait for the number to drop. It may surprise, but I'm very conscious we've seen a gradual drawdown as far as crude prices, and that's very, very positive for consumers and for inflation. And then the next part of it is, like, I understand where Fed Chair Powell's viewpoints are. I also understand where Stephen Moran's viewpoints are, wanting 200 basis points worth of cuts. Now, he's putting that on the table. Maybe he's going to be the new Fed chair. So there's a lot of rumblings. Powell's only in there till May, and it'll be interesting to see how the next couple of months work through. But yes, are we going to see 50 basis points worth of cuts by December, or 100 or 200? So everyone's got an opinion, and they're like noses at the moment, Andrew.
Yeah, how's this playing out, what we're seeing with bonds at the moment, when you look at the 10-year?
4.11, I mean, it was down at punched under 4%, and then it bounced back up, Andrew. 4.13 yesterday, 4.15, now it's at 4.11. The 2 years are running at just under 3.6. So that's, it seems to have a very much, we all understand the bond market and how it rolls. And it's got a little bit of a mind of its own, but it's certainly in a downdraft mood, and maybe that's going to continue, with Fed looking at cutting rates, and the other side, US dollar, probably further downside. It touched what was interesting last week. It rolled pretty hard. We saw a 95.81. It was a 3.5 year low, and it's bounced up to about 97.25 at the moment. So US dollar's very, very choppy and volatile. That's great for trading.
It is indeed, but Pete, so your expectations there that the US dollar is going to continue to find some weakness then?
I think so, Andrew. If you were, if you draw a centre line between Stephen Moran and Fed Chair Powell, let's say it's 100 basis points, it's going to really, put some major pressure on as far as cuts to that US dollar. So maybe a 94, 95 handle is very achievable. I mean, if you touched 95 last week, there's every chance it could punch lower than that leading up to Christmas, and I wouldn't be surprised for that to materialise. So, yeah, keep an eye on it. All the other currencies have had a nice run up, and, even the Aussie's running at 66 cents. So if you're a currency trader, there's been plenty of opportunity to really, perform well, and certainly, good profitability.
How do you see that playing out for the Aussie towards the end of the year, Peter?
Maybe a little bit further up, Andrew. I mean, depends on how aggressive we're going to be as rate cut policy. But I wouldn't be surprised if 67 handle's got to be very much on our focus if that US dollar takes more of an unwind. It's down to 12 or 13% since President Trump came into power. It was 13%, I think, last week. So I think that's going to, and that's a lot of, that's a huge discount in a 9-month window. So that obviously is that's the mood at the moment, and I think that US dollar is going to get softer. Everyone's piled into gold and silver. It's up 100%. We had an 1807 number 2 years ago on October 7. So you're 50 weeks ago. It was, 100 weeks ago. not 102 weeks ago. I've got to count the weeks, Andrew. It was it's gold's up 100% in that
Yep.
time. So that really demonstrates the move that we've seen.
Well, not just gold, of course, we're talking about equities at record highs as well. Not so with crypto. What are you seeing there, Pete? What's proven to be a bit of a drag for the broader market at the moment?
I think it was probably over. I mean, any market, Andrew, gets a little bit hot, and it had a big run up, and probably a little bit of that hot steam has come out of it. It's too difficult to really pinpoint, other than it's volatile. It offers, if you're in short-term trading and you like that and run your models against it, then there's plenty of movement. As far as uplift, it's had explosive growth to the upside over the last couple of years. It's consolidating, and I think traders are probably looking at other opportunities in the market. You can't discount equity markets. Some are up 50 and 80, and the Karachi market's up 92% for the year, Pakistan. So there's plenty of opportunity out there as far as other markets that are performing, and gold, and there's only so much money. So maybe less has been pushed into the crypto market, and they're looking for other opportunities.